I know that there's a lot of policies wrapped around the housing market. And so that's why kind of breaking down that and seeing if that is like something that you want to risk. So I would say timing is a big thing, yeah, for me as well.
Austin homeowners are fighting back. Jeremy Knight, your favorite Austin realtor. Today we have new economic data for the Austin area. We have rate cuts being announced tomorrow. So this is Tuesday. Rate cuts are going to be announced tomorrow. Are they going to be 0.25? Are they going to be 0.5? There's some really, really important things here. Why homeowners are fighting back against home buyers. And if you're a home buyer, pay attention to the end of this video because it is very important for you to pay attention to what's about to happen. I got special guests coming on and I have a lot to go through today. So first, let's talk about the interest rates, right? So interest rates have been in the news about coming down. And every buyer I talk to is talking about how unaffordable rates are. Well, listen to this clip right now. Now, this is one of Ivy Zelman's people, Ivy Zelman, who predicted the housing crash in 2008. This is Alan Ratner, and he is going to tell us what's happening with these interest rates and are they actually going to be coming down further? Here you go.
Well, as we've seen really since June when mortgage rates peaked in the mid 7% range, the bond market's anticipating a Fed rate cut cycle. I know there's a lot of debate whether it's going to be 25 basis points or 50 basis points, and I don't have a view that's any better than anybody else at this point. But the mortgage market's already pricing in a Fed easing cycle. We've seen mortgage rates already pull back roughly 100 basis points from the highs. So the Fed simply announcing this week, however much they're going to cut, that shouldn't have too much of an impact, I would think, on the mortgage market. Over time, we do expect to see rates gradually decline as inflation hopefully remains tame. But in the near term, I wouldn't expect much movement.
Okay, so you just heard Alan talk about how what I've actually been saying is that interest rates have been falling. Now they're at 6.12%, down from about 7.5% not too long ago. And usually what that means is for every one drop, so from 7.5 to 6.5%, you see 5 million more buyers out in the market. Where are the buyers though? In the Austin area, we're going to go over the stats in a minute, but it is really quiet in the Austin area. Now, I have seen a pickup with rates dropping down, but it's not as much as I thought it would be. Now, rates have dropped, again, 7.5 all the way down to 6.12. Where are all the buyers? I think what you're hearing and most buyers are hearing is that they are waiting for rates to drop even further. I'm going to bring somebody on in a second to ask questions about that. Secondly, what you're hearing from a lot of people is I'm waiting till after the election. So if you're one of those people, you tell me, do you think that the election really impacts you as a consumer? And are you waiting for rates to come down even further? We just heard from Alan here that rates are kind of already baked into the cake. They're, where we might see more is if the Fed does do a full 0.5% drop, we might see rates come down a little bit further from where they are, but into the 5s. This is what I've been telling you though. I've been telling you that when these rates come down and we head into next year, a lot of analysts are saying that over the next 2 years, we're going to see about a 4 to 7% increase in prices nationally because of these rates coming down. So are a lot of these home sellers that have been a 2 and 2.5% rate going to be incentivized by 5.5 to 5.75? Are you as a home buyer going to be incentivized? That's for you to drop a comment below. But let's talk about the Austin numbers. So I've been telling you the last half of the year is always the best time in the year to buy. Well, this chart right here continues to show that. Now, this is the MSA chart. And if you look at the MSA chart, you see a peak usually around the May timeframe, and then a drop in prices, drop in prices, drop in prices. Now, we are right now in the MSA, we're at 439. This number just came out, shows that we're 4.4% below last year. That's another month over month decline. And we're down from the high of 2022 at 496 down to 439. The thing that's interesting here, though, is if we're looking at the data, closed data for the MSA is up. So these rates are starting to impact buyers, or they're jumping back in. Secondly, month of inventory is down month over month. It's up year over year, but it is down month over month, down to 4.9%. New listings are slowing down. So inventory is actually starting to come down in the Austin area. And here's a chart to show you exactly that. You're seeing inventory start to drop. Now, why is that? It's because of this time of year, a lot of people start pulling their homes off the market. Sales have ticked up a little bit in the Austin area, not enough to make a huge dent in prices, but overall, the MSA, you do have prices coming down slightly, slightly. Here's what's interesting. The closed data shows that homes are selling 93.3% of list price. So that's pretty good information. If you're a home buyer, that's really good information to know that most homes are selling about 6.7% below list price in the MSA. That's the larger Austin area. But let's look at Austin. Austin just crossed over the 2022 peak prices. Yes. Here is my chart. I am the only one that's been charting this for a long time. But if you look at this, we ended month over month up in August, right? So those rate drops did show enough buyers coming out to make prices go up. If you look, what happened in 2022, and all along I've been telling you that the crash happened in 22. Well, it happened this month, and because look, we're at 585, which is higher than 22, higher than 23, and higher than 21. Now, this is the Austin area. Still concerning for the Austin area, though, is we did see closed prices down year over year, or closings down year over year. Months of inventory did come down. It's now at 5.4. We were at 6 months of inventory recently. So what that means is if we had no more homes listed today, that it would take 6 months. Now it's down to 5.4 months. So what is causing this? A lot of it has to do with home sellers starting to pull their homes off the market. So what does that mean? A lot of homeowners, like the home that we're sitting in right here, is going to be back on the market shortly. So I don't think we're going to see a huge decrease in inventory, but it just means that, and this is why homeowners are fighting back. By the way, stay tuned to the end of the video because I'm going to tell you why homeowners are fighting back and how they're fighting back. But this just shows you that prices are kind of going to be the best place right now for home buyers to really get a good deal. This is what Alan Ratner said about the Austin market in general. He talked about Dallas and Austin. Here's a real clip of what he had to say.
So, those are markets where resale inventory has begun to rise. And a lot of the increase, frankly, is just homes sitting on the market a little bit longer, as opposed to new listings accelerating at a very dramatic rate. But, I think every market is a little bit different. I was in Dallas about a month ago, and one thing we heard from a lot of builders there is that, the job growth has slowed there, and they feel like that's what's having more of an impact on activity. Whereas in Austin, maybe it's a function of more inventory rising from people that bought second homes or might have been working remotely during COVID that are now perhaps going back to the office. So, there's a little bit of a digestion period going on there. Texas is still a market that has very solid population growth. Builders are very bullish on the market longer term. But I think anytime you see a fairly rapid rise in inventory, even if it's coming off of low levels, there's more of a digestion period, and I think pricing is ultimately the lever.
Let's talk foreclosures, because foreclosures, I've heard everybody saying, look, you just saw me at an auction, right? I have a video coming out next week about us being at a foreclosure auction, but you hear everybody talking about how foreclosures are going up and everything is dropping. Here's what's interesting. Here's what the scared tubers aren't going to show you. ATOM's August 2024 foreclosure market report reveals that a total of 30,000 foreclosure filings, down 5.3% from the previous month and 11% down from August 2023. The reason why we saw so many foreclosures, which was still such a small number, is we had years where no foreclosures were happening because of COVID. I don't even know if we can say that word on YouTube anymore. Nevada, Florida, and Illinois had the highest foreclosure rates, and both foreclosure starts at the REO declines. So those are the states with the largest. So Texas is not even in there. Florida, anybody else remember 2008, Florida having and Nevada having issues? Curious why Texas isn't on here. Oh, because we're built on really good jobs coming here. In fact, that's what Alan Ratner said in that post about the Austin area. Foreclosure activity remains significantly lower than the 2008 financial crisis, where monthly filings exceeded 300,000. That is a huge difference from 2008. Now, are foreclosures going to be the reason that we see a market crash if that's what people are predicting? I don't think so. I think it'll be other things like banks and things like that. You tell me in the comment section. But the reality is foreclosure rankings, Nevada had 2,400, Florida 2,600, Illinois 2,800, South Carolina 2,800, and New Jersey 3,200. You would imagine that everyone would assume that the Austin area would be seeing all these foreclosures because you have all these second-time home buyers, like Ratner said. Alan Ratner said, yep. But again, Texas is not even on the highs. Texas as a whole is at 1,800. And so there you go. You tell me, are foreclosures going to see a massive boom, or are the scared tubers out of a job? You tell me. Let's get to the next segment. All right, so I have Bryce here. Bryce is the guy that you see behind the camera a lot. Now, he is a soon-to-be first-time home buyer, and he's in the same struggle bus as a lot of people are when they're looking at buying a home right now. So, Bryce, what are you worried about as a consumer right now?
Yeah. To answer your question, Jeremy, thank you for having me on. It's weird being in front of the camera this time, but yeah, to answer your question, I mean, definitely affordability is a huge, key factor for me. I know that what my parents have is at least 2,500 square feet. And so, kind of knowing what they pay versus what I might, now have to get, I'm a little nervous about that.
Yeah.
Affordability is definitely one factor, a huge factor, and I believe that timing is also a huge important key because we don't really know what's going to happen with the election. You telling everybody, and me especially, I think that it is a really good time to buy right now because the September October time frame is before the election. Whatever happens post-election is kind of we can't all vote. It is in our control, but at the same time, if you don't agree with what happens post-election, I know that there's a lot of policies wrapped around the housing market, and so that's why kind of breaking down that and seeing if that is like something that you want to risk. And so I would say timing is a big thing for me as well. And then lastly is the price is falling. I believe that we have been seeing like a downwards trend. And so, taking advantage of this, I think it kind of all wraps into one of just like, the timing, the affordability, all this stuff is kind of wrapping itself in a bow right now. And so I would say that, as many concerns are out there, that this is kind of the season that I'm looking to, take that next step. So.
Yeah, I mean, look, the reality is that looking at the normal trends, this is the time of the year where prices to come down the most. We have still a lot of inventory in the Austin area.
Yeah.
The ability to negotiate on the good properties out there. I mean, even what you heard from Alan Ratner is that the homes that are on the market in the Austin area are stuff that's stale inventory. Sellers, we're going to talk about sellers fighting back in a minute. It's all wrapped up in the same things that we're saying right now. So pay attention to that. Yet, next year, if we do see rates drop even further, there could be a buyer frenzy the same time March, April, May that would price people out that could have gotten a good deal now. So that's up to you as a home buyer. It's something Bryce is thinking about, we've been talking about. So I thought it'd be a good opportunity to have him talk about what he's concerned because I know a lot of people think that we're here just to sell homes, but the reality is we're trying to help people make good financial decisions.
Yeah.
Thanks, Bryce.
Thank you. All right. Back to the back of the camera.
Back to the back. Okay, so some last stats about the Austin area before we get into what sellers are talking about is this. So last month, 62%, and this goes to exactly what we were just talking about, 62% of the homes that closed were under $500,000. Now, again, the median for the Austin larger area is 439,000. So that number is still above that number. But if you're looking at Austin specific at 585,000, 62%. So that is good news for most home buyers. And now look, even with Alan Ratner said is that a lot of builders are offering 4 to 5% interest rates, but builders are slowing down on single family homes in the area. In fact, we saw in the last video I did, we talked about the home builder confidence is down. But home builders are still offering 4 and 5% interest rates. So they are still seeing pretty heavy sales. In fact, new construction was 32% of the overall closed in the Austin area. Now, here's what's interesting. Of the active inventory, about half is under $500,000 and only 28% is new construction. So new construction only makes up 28%, but still makes up a good chunk of what we sell. So the question is it a good time to buy? Is it a good time to sell? That's up for you to debate. But here's how sellers are fighting back. So I work with a lot of homeowners. I work with a lot of sellers. And look, sellers in the Austin area are thinking the same thing the home buyer is thinking. The home buyer is thinking interest rates are coming down so I can afford a home. Home sellers are also thinking the same thing. Interest rates are coming down so I can get more for my home. So we have a lot of homeowners in the Austin area, and why we have so much stale inventory is homeowners are going, I don't want to drop below a certain price. I can hang on to it. I got 2.5% interest rate. They have lock-in effect that's keeping them in where they're not going, where they're going, hey, I don't really want to pay 5.5% on the next home. And the other thing that's pretty interesting is like 39% of homeowners are mortgage free. So you have a lot of homeowners that don't have any mortgage on their home at all. They'll wait for the price that they want, and they're waiting for rates to drop just like the home buyer is, so they get more money. So are you gonna wait for rates to drop? Because the reality is, we just heard from Alan Ratner that even though we're hearing a rate drop in September, rates have already come down. They may not fall further than they currently are. So this is up to you. Is it now the time to buy? Is it now the time to sell? You tell me in the comment section. We'll see you in the next video.